Good afternoon, everyone. Hope all is well. So, we are now going to be going live with a property investor and alternative means of investment where Aaron, who is from Knightley Investments, does property investments and other assets such as gold, stocks, and all that kind of stuff. And this is what we are going to talk about. So here we go.
Hey Murtaza, how you doing?
Hello, how are you?
I'm very well. Sorry about that. I have no idea. I don't know whether it was from me transferring to Wi-Fi to
Yeah,
4G, but it was
possibly.
just showing me a black. So yeah, I'm well. Yourself?
Good, good. All is well. Thank you so much for joining me today. It's a pleasure to have you
No.
on discussing about investments, property investments, alternative. I've seen your Instagram profile as to what investments you're doing. So I want to know all about
Yeah.
that. People want to know all about that. So please do share it with us. So thank you so much for joining me.
Yeah. No, well, no. Thank you for having me on. It's been good. We've been following each other for a while, following each other's
Absolutely.
posts. So I love your energy. It's good. It's consistent, which is what I love. So,
Great.
well, I suppose
Before we start the conversation, if you can introduce yourself as to who you are and what you do so that we can get the conversation going.
Yeah, for sure. So I'm Aaron Knightley of Knightley Investment Group. So it's Knightley Investment because unfortunately Instagram would only allow me to have Knightley Investment. So it is typical Instagram, right? So
Yeah.
it's Knightley Investment Group. So we cover off different areas. So we're not focused on one area. So we, as you just briefly said there, will invest in multiple areas. So
Yeah.
we've and especially myself and my family, we've spent a lot of time educating and learning from others in regards to a real spread of diversification in
Yeah.
where we can gain really good interest. So that's not just
Yeah.
through property, as I just caught the back end of, that is through precious metals, that's through private lending, that is through the stock market, um, and many different areas really, and a few riskier areas where where it hasn't gone so well. So we've learned the harsh way, but also we do see good returns. So we are in different areas. So we're not focused on one area. We're very much in multiple areas, and if it has growth and we understand it, we're probably in it.
Aaron, what I wanted to ask you is, and I ask this question to all my guests that come on here, is when we are young and, when we are kids going to school, college, university, all that kind of stuff, we aspire to be possibly a doctor, a lawyer, an architect, an engineer. Did you have these aspirations in mind, or from the start you had, no, I have that entrepreneurship mindset, and this is what I want to do, and I want to get into investments. This is how I see life.
Yeah, so I've come from a very working class background, very from the ground up, which I'm very proud of. And I certainly always had a spark. So I was always trying different things. I mean, look, I think I'm not the only one, but I did go through that period of selling sweets at school. I did go through that period of selling whatever you could really,
I've
cards.
done, I've
Selling
done, I've done about a
with
hundred plus live sessions, and you're not the first one to say this to me. So feel proud of
exactly.
yourself that you had this entrepreneurship in you since a young kid.
Exactly. So, there was always flair. And one thing that I always like to pass on to people is that when they can't get settled in a job, you hear of these stories where someone can just not settle in the job.
Yeah,
And some people or their family members will go, God, I just wish he would settle down and just be in a stable job. Well,
yeah,
maybe that individual is built for, and that they just can't find their way being an employee,
in a nine to
and they
five,
just don't
exactly.
know what they want to do yet. So I was always yeah. So I was always very much that, and I think it's also hard to, especially if you have got entrepreneurship and you are busy in the mind and you are you don't know where to focus your energy, especially in the early days. And one thing I do believe, which I didn't know at the time, is try as many things as possible. So if you think you like that, or you think you want to do this, or you're not sure if that's going to work, do it, tick it off, and move on. Do it, tick it off, move on. If it didn't work, at least you'll have that satisfaction at the end of the day, going, well, I gave it a go. I didn't miss it. Yeah, I tried it. So I did try many things, and I started up. I worked for a company selling sports, like leisure goods, gym equipment, stuff like that. When I was really young, and without realizing, and this is a funny story actually. I haven't actually told many. I've never actually said this on a call.
Well, you're live right now, so you might as well share.
Yeah, exactly. So and what I'd done is I saw how they were buying from Alibaba, and I had no idea. And I thought, God, we're selling a lot of this a day. We're selling a lot. And this is just gym equipment, and it almost baffled me how many people would buy gym equipment for their homes. And I was thinking, well, what stop? I've got some savings. I could borrow some if I said to my parents at the time, look, I've got an idea. Can I give it a go? So anyway, I actually went to the owner, the managing director of the company, and I said, look, how are you doing it? Little did I know, and how naive I was at the time, that actually all I'd be doing is flagging up that I could potentially end up being competition. So he nodded. He went, oh, okay, yeah, that's great that you got a flair. That's great. And it went very quiet, and he never gave me any answers. And he said he would drop me an email. And anyway, the next thing I was getting my P45. That was it. I was gone because I had this. Yeah, I was gone. I was a really big hoo-ha about it. And because I'd been asking, I remember saying to him, so how much do you buy from Alibaba? How much do you stock? And I remember asking all these questions I had on a pen and paper, but I thought nothing of it. When you just think you're only just, all you're doing is dreaming big and you're hoping someone's going to give you the advice.
And you're being honest.
Little did I know. Yeah, and I was like, I was about 16 at the time, or just turning 16 or gone 16. And I just thought all I was doing was asking advice because I got aspirations for bigger and better, but absolutely. I was just highlighting to him that actually I could have been competition if I'd have.
Horizon.
Yeah, and he got rid of me. He got that. So from there, I did many other things. I started up an eBay shop where I sold toddler and junior clothes. I sold like Ralph Lauren, Lacoste. I sold all the branding stuff, which I bought really cheap from Spock, Gumtree, Car Boot. And I made quite good money out of that. I did that for about 9-10 months. Made quite good money. Managed to save quite a bit. And then I went into converting trailers. So we would buy like old horse trailers and teardrop trailers, convert them and sell them. So I did loads of things.
Convert them into what exactly?
So the teardrop trailers went into cocktail bars. And we had one of our teardrop trailers on Amazing Spaces on the television, on the channel. There was another project that we did, which I was part of, which was converting a bus, which was on Pawn Shop, the program, which was pretty good. And we did all kind of and we converted a horse trailer, which didn't go very well, but we managed to make our money back. So I ended up doing all sorts until I then started to think, oh, okay, well, I've managed to save a bit of capital. What I'm doing is I'm flittering about, although I'm enjoying what I'm doing and I'm making some money. I need to narrow down and focus. And that's basically when I started the whole property thing. And I think a lot of people, if they're an entrepreneur or they've got a spark, I don't know about you and people that you've come across, but it seems to be they go like down the property way. I think it's, it's for bricks and mortar is pretty secure, isn't it?
Absolutely.
Can't really go wrong.
Absolutely. I mean, my inspiration to get into property was my wife, because at the time that we got together, I was into business. I was not into business, but I was studying business studies at university, and she was studying architecture, and that's it. Put the two together, property.
Bosh, done.
And that's it. So that's how I started my whole career into property.
Yeah, and that's the thing. I think it is. You commit to it, and you can learn. You can learn pretty well.
Exactly.
I think you can really separate yourself from the ones that kind of don't fully apply themselves to property and know in the full. I think even if you're just investing, I think as long as you know everything about it, that's from a estate agency, how they sell, how it's marketed, to the exit product, and that's important for me, because now that we're we're passive investors. We're more on the armchair side now, where we don't really get too hands on. I need
Exactly.
to fully understand. One thing I have learned, and I have lost money, and so has my family, but one thing I have learned is that if you don't know the full circle, if you come up against hard times, you need to know how this is going to work and how you might be able to recoup your money. Because if you don't fully understand, you could be in a pickle. And I've been in a pickle before. So I do like to understand that I'm investing in the beginning, the middle, and the end. And I know all stages. So I've been pretty, as you've probably seen on social media and any of my calls,
Yep.
I'm pretty straightforward when it comes to the education. Learn it. Become obsessed by it, and don't leave any stones unturned.
I mean, one
you
thing
might have a good
I do
chance.
like
And
about
I
yourself
feel
is that you keep learning, and what you learn,
always.
and you post that. I mean, I've seen what you do on your nightly roundtable, discussing from forex to gold to property investment, how to start a business, how to leverage your business, how to make the best out of social media platforms. I mean, I've followed you, and I think you're doing an absolutely amazing job in spreading that knowledge, empowering people to realize their maximum potential, and that's absolutely
Yeah,
amazing. So you're into property investment, you're into alternative investments also.
yeah.
The question I want to ask you is, where do you find the balance?
So the balance for me started with a bit of
I'll,
luck.
co- I'll, I'll come to the alternative investments that you do, but I want to know where the balance is between property and the other stuff.
So the balance is, I would say that I haven't got a percentage that I could say to you now that I've got 25% here, I've got 30% here, and I've got the remaining 65 and whatever percentage here. I haven't got a percentage. I go with, because we'll review every year where we are.
Okay.
And it's like most recently, I've changed my stocks and shares approach because I believe we're going to see another crash. That's just me personally. I feel that we're going to see it dip. I think we're going to see some changes over these next, I don't know, 6, 7, 8 months.
Few months. Yep.
Therefore, I feel that it was a smart of me to make my own decision that I've pulled back ever so slightly on my allocation into stocks, and I'm pushing that more into precious metals now because I expect the drop. Now, the balance for me is I started with stocks through a bit of luck. I would be lying if I said that it was by education and it was by knowing exactly what I was doing, because I was only young at the time. So the first stocks I ever bought was in a mining company. I was very young. I was about 18. And I remember reading up on Hargreaves and Lansdown.
You mean the cryptocurrency mining?
No, actual mining. So this was
precious metal mining.
No, minerals, and it was.
Sorry, excuse
me. Do you know? I couldn't even tell you. The company who I bought from was a company called Cyrus Minerals at the time.
Okay.
And they were doing this big mining excavation in somewhere out in America. Anyway, so there was all these great articles at the time, and I was only new, and I was reading about it, and I thought, that sounds amazing. What they plan to do, what they're forecasting. I understood, financial sort of reading, so I got it. So I thought, okay, well, I'm going to put some money into it, So anyway, I did. I bought a load of stocks, put a few £100 in, and I would check maybe once every 2 weeks. I wouldn't check every day. I'd check once every 2 weeks, and the stock started going up. So I started feeling really good about myself. So I was saying, I'm on something here.
I'm on the right track out here.
Thinking I've nailed it. I've made a really good decision. But it wasn't. It was luck because I didn't really understand it. So anyway, and probably in about 3 months' time, I bought around about £11 each a share, and I think it was about 3 months. They ended up being about £54. So I had made quite good money on it. Wow. However, I sold. I remember speaking to Hargreaves and Lansdown, and I said, look, I want to sell. The reports weren't as good as what they were, and they said, okay, these are the fees you can sell. So I sold. Anyway, a few weeks later, it crashed hard. It went down to about £7, £8. So I got out. Yeah. So although I didn't lose, I lost that was my first real lesson that the stock market can change overnight.
Of course, of course.
So I was very skeptical at the time. However, it was probably about 2 years later. A good friend of mine who was quite a successful investor, or he was very experienced compared to where I was in the stock market, and I remember him saying to me, "Amazon, we need to buy an Amazon." And I remember saying to him, "I know of Amazon. I don't really use Amazon. I just never. I use Amazon all the time now, but I never used Amazon." And he was like, "We need to buy. We need to buy an Amazon." And I remember saying to him, "Well, why?" And he said, this. Anyway, he gave me all this stuff to read, and I read it, and I said, "Yeah, it all sounds great, but Amazon's not the only company that has great forecasts. You know, there are many other companies that have great forecasts." And I remember thinking, well, if it all happens, great, but how do we know? And he said, "Look, we need to buy." So I said, "Okay, I'll buy." He bought a lot more than I did. I bought a fair few. It was a few thousand, and at the time, it was about £235 a share that I bought at the time. So
And I've seen
I
your
bought
post about it,
few.
so I know I kind of know where you're standing today.
I've shared my account.
Yeah,
I've shared my account with what they are on Morgan and Stanley. So I hit luck. That wasn't by me being, the smartest guy in the room. That was just by following a tip off. But from that, it just showed me
and
the
being with the
potential in
right
stock
people.
market. Yeah. So that was key. Yeah, exactly. So that just ties into another point: being around the right people. So yeah, it wasn't into my choice and my pickings, but what I did learn is I learned very quickly that actually the stock market in a period of 5 years can make you a hell of a lot of money. So that's when I decided, okay, I better start drip feeding into the stock market, and that's what I do today. So I constantly drip feed. I drip feed quite a lot. Like I said, I've changed my allocation slightly, and then I've just, as you probably see, I post up every now and again my library of Audible books and hardback
What's
books.
the hottest stock to buy today?
Hottest stock? God, well, there's many out there because of COVID-19. However, I would feel that if you time Amazon right still, which I do at the moment, if you time Amazon, although you're going to be paying, see what I look for in a company, and one thing that Warren Buffett said is, when you see a company that has growth, so let's say a company is worth 3 billion, and it's forecasted in the next 5 years to be a company that's worth 10 or 12 billion. Well, if it plateaus, then that's not going to be a great company, because you're going to see growth in the 5 years, but then what's happening after that 5 years? How are they expanding? What areas they're going into? Now, with Amazon, what I would still say, and why I do still look to buy when Amazon drops, and I kind of know when Amazon's going to drop now because I know the pattern. And if you stay close to when Trump and Bezos battle it out in a conversation, you can be sure that the market will drop. So you could potentially buy Amazon when it drops by $150, buy in, and then know that you're still going to get $250 in uplift in the next 2 months. So but you're just purchasing it for quite a lot of money.
And possibly keep it till 2026 till he turns into a trillionaire.
Absolutely, and he will. And this is the thing, he will. And I had a discussion the other day, and he will do. But there's so much growth. There's Amazon Go. There's all these robots that are going to be created. We're going to go into train lines. He's going to open up a bank.
Just to give you an example, right now, my group of friends, we're like 6 of us, and I'm the only one that's into property. 5 of them sell on Amazon. So they sell all sorts of products from China, from here, from there, everywhere. They were complaining to me before COVID and lockdown that business is not that great, blah, blah, blah. It's not going. There's a lot of competition. There are a lot of salespeople out there that are selling on Amazon and everything. 2 weeks into lockdown, and they have tripled their turnover in 2 weeks. I mean, they were selling stuff. I mean, even today, these guys are selling like anything. Even they told me that, Murtaza, why don't you come into, setting up Amazon and doing it? I was like, and at that point I was in 2 minds whether to do this. I'd lost a few deals because of this whole thing. And then 2 days later, I got a deal. That proposal just went down the drain. So I was
Yeah.
like, no, I'm sticking to property. You guys sell on Amazon. You become millionaires. I'll be happy.
That and that's a really good point. And the thing that you've just proved that you've got a head on your shoulders, because what you've done there is you've taken your proven model and the stability over a what if, a
Yep,
speculation,
exactly.
an unknown area that you haven't spent enough time in. So
Absolutely.
and that's what I had done early last year. No, not 2000. So 2000 mid 2018.
Yep.
I had seen a return from a model that I hadn't invested in. It was like a peer-to-peer lending, but it was
Okay.
it was unregulated,
Okay.
and it had worked for the first term, so I was happy to go back in again.
Yep.
But what I didn't do is I didn't do enough research and enough due diligence that if it goes wrong, how do I react and how do I potentially recoup my money?
Yep.
I didn't do any of that because I don't know, because I suppose at the time I felt that I knew enough. I was confident that my capital, especially when you have a return the first time round, you feel pretty confident. You're like, okay, you know, I'll go again. And I went again, and we lost all of our money because it wasn't the area that I knew most. So,
I mean,
from what
I had the same thing when I was into cryptos, but I'll let you finish.
yeah, exactly. And you know, if your model and profession is in property, and you start drifting off,
Yeah.
you know, you've got to question what. I tell you one saying I do like. I love this saying, and I quote it sometimes. Is don't go chasing the big bucks into the woods because you're going to crash.
Exactly.
You know, stay on the straight road. You know, if you see that big stag, that big buck that looks beautiful, you know, and I totally agree, because as soon as you veer off and you hear that, oh, I could make really good money in a short period of time, there's something in your gut that says this isn't right, or you don't know enough. Don't do it.
Exactly.
And I think
Exactly.
you need to trust your gut, because it will save you from a lot of mistakes. But anyway, as long as you learn from the mistake, it's a lesson. So yeah, so that was one of my biggest lessons is losing money, and but then it's gone on and proven to make good decisions for me, you know, going forward in other areas, which I'm sure we're going to cover off.
Absolutely. I mean, it's all about learning from your mistakes, getting up so that you don't do it again, and carry on with life. And that's what it's about, right? I mean, today a
Yeah,
lot of people lose money in all sorts of investments, but what's done is done. Learn from that lesson. Don't do it again.
yeah,
Go out and make it happen again, doing other sorts of investments. So,
yeah,
prime example, what you're saying right now about how you did it. You lost your money, you came back, you invested, and today you're seeing the results, right? So it's
yeah.
absolutely great in terms of sharing all of that stuff with us over here. What's next in the Knightley Investments group?
So we're pretty much fully committed. Apart from a smaller allocation, we're pretty much fully committed now for the rest of the year, until next year. So we are very much in the thick of compound investing at the moment, and we have been for the last 5 years. So
Okay.
everything now we just see on a recycle basis. So, and the only thing that will change is the amount, and if we go with the same client again, and that's with our bigger allocation. So we're not talking about the stocks and shares, because that's a drip feed. We're not talking about the precious metals, because that's a drip feed. And then obviously excluding the ISAs, everyone has their big ISAs, and then obviously we have our private pensions. Excluding all of that, we have our big allocation. So that's where we'll support our bigger clients. So if more of a national high street brand came to us and said, we're raising junior equity, would you like to be involved? And that's when you would see me go into London, and we'd have a sit down, we'd have a meeting, and then I would basically discuss on behalf of my family, and also my parents as well. So and then we basically discuss the terms. But now we use regular clients, so we don't really drift off. The two clients that we use. Again, it comes down to, if you feel comfortable and it's worked and it's proven, why look elsewhere?
Absolutely.
And it is a long term.
Exactly.
So,
I mean, if
one
client, if those clients are paving the way to where you want to be, then there's no point. I mean, I read a quote yesterday, like, treat your clients as family, and they will keep you going for the rest of your life, and you won't have to keep searching for new ones. So
Yeah,
it's
and
it's
also
absolutely
the thing
amazing.
is, I think the more you start looking into new clients and start spreading your money too thin, that's when you can get in a bit of a predicament. Because if you start reducing your investment allocations too
Yeah,
much because you're going
yeah,
across too many opportunities, not only do I feel, you could say, well, you haven't kept all your eggs in one basket, but on the flip side, you could say, well, you're spread too thinly now that, let's say 5 of them go wrong and you were only meant to see a small interest back, but you've actually lost quite a big allocation that you've already put out. The interest was going to be small because you spread it really thin, but now if it does go wrong, which the thing is, that's why I never deal with retail investors, because if it does go wrong, I can tell you now, you've probably dealt with people who want to buy properties and then they have a
exactly.
wobble and then they pull out,
Yeah,
is that they're not experienced enough to know that they're fully committed to a decision that has a risk. Everything has a risk. Buying a property has a risk.
of
You know,
course, of
it
course.
could collapse. It could collapse.
Even if it's bought for yourself as an investment, as a summer
Yeah.
home, anything could go wrong. So there's always a risk. You're right.
Exactly. So everything is a risk. So that's why now we have to really screen anyone that we work with. So we'll invest into our primary clients, but also we have a lot of people now that will go, we have capital, but we'd like something with a little bit more security, a little bit longer term, and that is proven. So we don't want to go with someone who's just buying houses and wants our money to build a portfolio. It's not that. One thing I will say is that when you spend time in London, and I say London because that's for me where I spend a lot of my time, but when you spend time in London with tight-knit groups and you get introduced to, really wealthy guys, the saying is true, like in Rich Dad, Poor Dad, there are investments out there that you just don't know about,
Of
that the
course,
normal people wouldn't know about. And that's
of course.
why you have to screen people, because I've had it before where we've dealt with retail investors who say, we want to invest in what you're investing in. And we'll go, firstly, we need to know that you've got the capital available, because I don't want to waste my time and I don't want to waste
Exactly,
your time.
exactly,
They'll have the
absolutely.
capital available. But because of the experience, as soon as a problem goes wrong, they are not happy.
Yep,
Well, there is no reward without risk. You
without a
could
risk.
lose everything. You
Absolutely,
could lose everything. You need to be fully aware of that. However, it's calculated, it's
exactly,
mitigated,
exactly,
and if it pulls off, you're going to be in pocket, and it's going to be great. Let's say hi to these guys.
absolutely.
So that's why we only ever deal with high net worths or sophisticated investors, because they have to self-cert paperwork that they're either turning over 100,000, 125,000 a year as a personal income,
Yep,
assets
yep,
more than 250,000, or if they're a sophisticated investor, they must work within equity,
of
or they
course.
must be turning over 1 million per annum in a business. Because if it does go wrong, I need to know that I can walk away saying, you made the decision, you signed the paperwork, you chose to invest, we've invested, and quite frankly, if they lose, I lose, because
Exactly.
I'm
It's
invested
always the
probably
same.
twice as much more as what they have.
Absolutely, absolutely.
So,
Totally
it, you
agree
know,
with what you've
it,
said in terms of how to go and pick the right clients for your investments, and always make them aware of the risks that are followed with those investments. Because if you don't make them
yeah,
aware, it could fall back just on you. So
yeah,
it's
absolutely,
absolutely
and that's
great.
why legal paperwork is put in place, right? And that's also one thing that we would never do. And I recommended this to someone else who had the opportunity. I would never work with someone who is a high-profile person on social media, because if it goes wrong, no, I would never invest. I mean, this is, we're building a relationship here, but I would never financially commit with someone who is on social media, because you often
They'll just
find that
go out and expose you.
they go, well, no, they go very childish. I've
Yeah.
seen it happen to other people. It's almost like they were foolish in making the mistake. So
Yeah.
you know, I have almost like a checkbox that if someone approaches us and is keen, I almost have my own checklist that I do on them. They could offer you all the money in the world, but if they don't meet the criteria, it's not worth the risk.
Absolutely.
Just see what I mean. It's just not
Absolutely.
worth it. So, but that's why we're happy to do what we do, and it's working for us so far. And like I said, we're very much in the thick of compounding now. It takes a while to compound, and I tell you one thing that people get really frustrated about, and I have a lot of conversations, is people get strung up on this because there are so many scams. There's so many shadows out there for get rich. So much fluff in order to turn over a good profit. People can't comprehend that they might have to wait the first year, 2 and 3 years to compound. And then once that compounding happens, if you keep recycling and that money comes back after year 1, 2, and year 3, and you just compound your investment and interest, you soon realise that after 4 or 5 years, you're making pretty damn good money.
Exactly.
And then and that comes discipline, because what you do in between those compounding periods is safe in between.
Daddy, Stephanie
Say hello.
Hi.
Hello.
Mum, it's Dad. It's Stephanie.
I'm on a call. It says hello. I'm on a call. So in between these compounding periods, while your money's working hard, save, be disciplined,
Absolutely.
have commitment. Don't go out spending
Absolutely.
£45 on Levi jeans. Don't go out spending money on all this extra materialistic stuff that we all get blinded by because we want to prove a point to someone we went to school with 5 years ago, and we want to go down in a finance Mercedes. Cut all that out, cut out the crap, save that money hard, and then next time your compound investment comes back, pump all of that saved money back in. And then you're going to see a higher interest. You know, it's simple to me. As long as you educate yourself and you learn, and that's why I make such a big thing of it on my nightly roundtable every week. So you know the story. You've seen enough.
I mean, I've actually been there once. I do want to join in, but with all my live sessions, property viewings, all that kind of stuff, it's just sometimes hard to make time for it. But I'll make sure that I'm there sometime next week or the following.
Definitely.
Aaron, thank you so much for joining me, sharing so much great advice, so much knowledge about property investments, about investing in metal, stocks, all that kind of stuff. It's been a real pleasure to have you on. But before you go, I would like you to share some positive advice with the world out there. We're living in a lot of negative sentiment right now. Okay, lockdown's over, COVID's still there somewhere. But what sort of positive advice would you like to share with the world today?
I would say keep learning, keep educating, save your money. We don't need to pay people to learn what's already out there. If you want to learn it, join my weekly calls, read my blog, a bit of promo there. But I would just say, just keep learning. To me, if you can have patience, discipline, commitment, and realize that reality, and I really emphasize the word reality because there is a lot of fluff with a Lamborghini lifestyle. It's not. It's hard. It's hard work, and it is compounding. Compounding isn't just for investing. It's about educating. It's about consistency. And the first thing I would say as well, just to finish on, invest in your health.
Yep.
Because if you don't work, nothing else will.
Exactly.
If you don't work, nothing else will.
And I can't wait for the gyms to open up on the 4th.
Stay healthy. And we're gonna have a session one day, Murtaza. I'm gonna come up with it. So
I've seen how you go out and you do your 10Ks and on cycling and everything. One day I will make sure that I come and join you on your cycle ride.
Oh, absolutely. And I've just realised I've switched my camera around and I have no idea how to turn it. There we go.
It's all right.
I'm back.
Super. But thank you so much
for
joining me, Aaron.
How do I get a photo with you, Murtaza?
You want to get
how do we get a photo,
right
or do
now?
we just screen cap it?
Yeah, just
let's do
it. 1, 2,
me and
3.
You. Me and you right now.
1, 2, 3, and
good man.
Go. Super.
Some stuff.
Here we go. Done.
Are you still there?
It's going to be posted This is going to be posted on my profile. This is also going to be re-edited and posted again for tomorrow or the weekend. Do check it out.
Awesome. Cheers, Mutaza. You take care.
Thank you so much. Take care.
No worries, my friend. Cheers.
Bye-bye.
Bye-bye.
So, guys, that was Aaron Knightley from Knightley Investments Group. Wow. Entrepreneurship at its best. These are the people that will give you the right advice. Like he said, don't go out for the people who are flying and showing off their Lamborghini lifestyle and all that kind of stuff. It's not going to work. These are the people who will give real advice. So thank you so much to Aaron for joining me. Thank you to all the viewers that tuned in. I hope it was educating what Aaron mentioned, what Aaron spoke about. Do check it out. Do check out his profile if you're looking for any kind of investment advice. Thank you so much, everyone. Take care. Bye-bye.